talk to you today about probably my favorite little module, which is dynamic allocations inside of Sage Intacct. We're going to talk about some creative use cases that we've seen with the module before, and we are going to talk through the construction of the module as well. Because this is a session for current Sage Intacct users, I'm not going to spend any time at any point in the session going over very basic standard Sage Intacct things. So we're assuming you already know what a dimension is. You've already interacted with Sage Intacct as an end user. So we like to start off the presentation just telling you a little bit about our firm. Most of you are current clients with us, so you do know us. There are some people who are newer to us on the call. So for all of your benefit, Dorton is a full-service CPA business consulting firm. We are based in Lexington, Louisville, Kentucky, and we also have an office in Raleigh, North Carolina. We work with clients really all throughout the United States and internationally. We have a very large presence in the Southeast region, but we have clients all over the place. We also have resources all over the place. I, for example, am in Connecticut, and we have other team members on the other side of the US, and then a bunch of people as well, obviously in Kentucky and North Carolina. The services we provide, pretty much the full range that you would expect from a CPA firm. So that includes things like tax and auditing, outsourced accounting, but we also have a very robust consulting practice and several different arms of that consulting division in which we do things like cybersecurity risk assessment, litigation support, IT audit, software evaluation, selection, and implementation, which is where I fall and the team that I work on falls. So Dean Dorton has been a Sage Intacct Premier Partner since 2013, and as of last month, we are a top 100 VAR, which is a value-added reseller for Sage Intacct. So the objectives of this session, in no particular order, you're going to learn about when to use Sage Intacct Dynamic Allocations, why Sage Intacct Dynamic Allocations can be a fit for nearly all businesses, not just nonprofits, as is a common misconception, what the mechanics of Sage Intacct Dynamic Allocations look like, and then we're going to talk about how some companies that we've worked with have used this module for some powerful and creative use cases, and give you some examples of what financial statements can look like before and after you use dynamic allocations. So I like to start this kind of presentation with the end result in mind. The purpose of dynamic allocations is to be able to see the true performance of any given facet of your business. For example, if you're reporting on an income statement by department, but if you put all of your overhead expenses into a single department called admin, how is that helping you to evaluate the true profitability of your other departments? Don't those other departments still benefit from things like your office space and your administrative staff, your shared equipment, your CEO going out and doing business development, and all these other shared costs? You need to have a way to measure how much of those resources are these other departments consuming, and then how do we allocate the costs so that these departments are getting their fair share. Otherwise, you're not going to get visibility into the true performance of those departments. And this same concept can be true of pretty much any dimension that you're working with within Sage Intacct. So whether that's project, customer, class, vendor, any dimension can be used for that same kind of concept. So this is what reporting may have looked like in a world before dynamic allocations. This is an example of a profit and loss by department. So we see here we've got our financial performance going down the rows with all of our revenue and expense accounts. And then in the columns, we have each of our different departments, and you see their share of revenue and expenses. The problem with this statement is if you look at the column that says management in general, that represents all of our overhead and administrative type costs. And for instance, $100,000 of rent and occupancy costs are sitting in this management in general column. That does nothing to tell you that, in fact, maybe the counseling services department occupies 25, 30% of your square footage. So actually, $25,000 to $30,000 of that rent expense is attributable to them. And that should be factored in when you're determining have they met their budgetary goals or the goals that they need to be able to cover the true overhead of the organization. So then we get a view of what can your financial report look like after you've applied dynamic allocations. So notice now we have these same columns for these same departments, but you see lines in the occupancy section where you can see the allocated occupancy costs. So in fact, the management and general or overhead part of the organization, when you're looking at this, you can tell it doesn't really occupy a tremendous amount of the space. It looks like it's maybe about 15%. And the overhead and rent expense is split out to all of the other departments that are occupying that space. So if we think about previously, the counseling services department looked like it was only losing about $7,000, but when you factor this in and all the allocations have finished, it's actually losing $43,000. So you need to find some other way to make that department work better. And then finally, the next and really kind of brilliant layer that you get with dynamic allocations in Intacct is this view that we're looking at on this slide. So here you see we have this report, and we're just focusing on the counseling services department for now, but what you get is a before and after view of what was my financial performance before these allocations, what was the impact of these allocations, and then what is the combined result. So what is my after allocations profit or loss for my department, for my project, for my location, whatever dimension you want to use. So you can see in this case that the allocations actually added $40,000 to the loss because this department was consuming all these other resources that previously were totally out of the picture. So it gave you a very misleading view. Not to mention, there are a lot of cases where you may have federal contracts, projects where you have the ability to allocate overhead or indirect costs to that project, to that contract, and you need to be able to report back to someone on what those allocation numbers were. So that's just another, beyond the obvious operational benefit, there are also compliance type applications of this module where you can allocate things based on a contractually allowed rate, which is very common with people who work with any kind of federal or government contracts. So of course, the question is, how do we get from the before state to the after state? So we're going to go through now an overview of the logic behind dynamic allocations. We're going to talk through the setup mechanics, and then we're going to review some real-world examples of how you can use this module to take and drive your next level reporting needs. So as I said before, dynamic allocation solves for the need for you to take revenue and expenses that might be isolated in one place and spread those among different dimension values. So common examples of things that people do with this are things like allocating fringe benefit expenses based on each department's share of gross salaries, allocating salaries to certain projects based on the number of hours worked per project, taking overhead expenses and allocating them to departments based on each department's share of the organization's overall revenue. There's hundreds of examples. I'm sure many of you have your own hundreds of examples of things that you need to allocate every day. In this module, you can also do things like allocate a percentage of expense. So say you have an agreed upon kind of indirect rate with a federal contract where they say, we'll give you 18% of all your expenses as an indirect charge. Well, you can do that with dynamic allocations because it lets you indicate how much you want to allocate. So those of you who might be either nonprofits or federal contractors that are for-profit organizations that work with projects may be familiar with this concept of an allowable indirect rate. We've seen a really high number of creative use cases with this module, and they all take what used to be manual effort and they fully automate it. So in a world before dynamic allocations, if you had to allocate expenses to departments, what you were probably doing was exporting out your financial statements to Excel by department, figuring out if you had an example where, say, overhead was allocated based on percentage of revenue, you used to export out those financial statements to Excel, calculate how much of the revenue each department has of the overall organization, and then do some fancy formula to figure out the allocation, and maybe book a journal entry back into the system to represent that allocation. Or oftentimes, people won't even put the allocations in their system, so their allocated financial statements exist purely offline. So we've seen all different flavors of that kind of situation, and we have worked with customers who had a lot of allocations in the past. So one example we have is we had a customer that had over 40 allocations, and in their old system, they'd have to run them one by one in a screen that looked a lot like MS-DOS, for those of you who remember that. And they'd have to run these allocations one by one. They'd have to run them manually and make sure that they did them in the right sequence. And frequently, they would also have to export out the results and calculate what the true up was, and then make a journal entry to fix what the system couldn't fully do. So when they moved to Sage Intacct and when they used dynamic allocations, they were able to replace all that allocation run with what is essentially a one-click process. So it was a tremendous amount of efficiency. And we've seen a large number of very similar use cases and results with the module. So let's talk about the design. The design of allocations, dynamic allocations, is pretty simple, pretty logical. It's looking at a few different factors, one of them being source or source pool. And the source pool is the group of costs that you're looking to allocate. So if you're thinking about this in terms of what question does each of these answer, the source pool answers the question, what do I want to allocate? The basis answers the question, how do I want to allocate it? Then you have a target entry, and the target entry is saying, where do I want this allocation to go? And then what you're left with is a result that reflects the allocated costs, allocated revenue, and the true performance of any segments of your organization. So those of you who are working with Sage Intacct, which is everyone on this call, may be familiar with the concept of what is called a transaction allocation. So transaction allocations exist in Sage Intacct as part of the core product. And those are when you're looking in screens such as your journal entries or your bills, your AR invoices, and you have a drop-down to choose a predefined allocation. So those are allocations that you do at the time of transaction entry. You know the parameters of that allocation up front, and you're allocating at the transaction level. Versus when you're using dynamic allocations, those allocations are happening after your transaction entry has already been done. They're done on a periodic basis. They can be as frequently as daily, but you can also do monthly, weekly, year-to-date, any kinds of the fancy dynamic reporting periods that Sage Intacct has. They're allocated at the account amount level, not at the account transaction level. So dynamic allocations is not taking every single transaction inside an account and allocating it. It's taking the account balance and allocating it out appropriately. And it's retaining or changing whatever dimensions you want it to. And we'll talk about how we build that out. The allocations in dynamic allocations are generally based on a calculated percent of something. So generally, you're looking for the system to go and figure out for you, what is this department's percentage of overall revenue, and then use that as the driver for your allocation. But Intacct is doing all of that so that you don't have to export things out to Excel and figure out the calculation and then book your adjustment. It just happens. You have account group flexibility, so you can choose, here's the account group where my source lives, here's the account group where my basis lives. And these allocations post to a user-defined book in Sage Intacct. That's how you get the magic of being able to show a before and after view of here's what it was before allocations, here's the impact of the allocation, and then here's my full allocated result. That's driven by the fact that these allocations are posting to a user-defined book. So you're able to split them out and do what Sage Intacct refers to as book stacking. And then finally, and for many people, most importantly, dynamic allocations helps you solve for the need to be able to prove and present an auditable, reasonable, consistent methodology for your allocations. I started out my career as an auditor in public accounting. So I know that if we were ever to look at allocations, one of the things that we always had to make sure was true was that the methodology used in an allocation was reasonable and consistently applied. It's not like they allocated something, one way today and then a different way next week just because they felt like it. No, we have to be able to prove that that methodology is consistent so that we're getting reasonable, accurate results. So the setup and mechanics of this module. There's 4 steps, and most of them are virtually no effort. The only step in the dynamic allocation setup process that does take some effort and takes some design and careful thought is step 2. But the first thing you do is subscribe to dynamic allocations, which is just subscribing to something in your subscription list. Then you're going to set up an account allocation definition. So an account allocation definition is the kind of the life force of dynamic allocations. This is where you're going to define what is it that I want to allocate, how do I want to allocate it, and where is that allocated entry going to end up. Then you're going to generate your account allocation. So that's one click in many cases. You can also group them together to run them in bulk. And then you're going to look at your financial reporting and verify that the results reflect what you were expecting to see. So as I said before, dynamic allocations are a balanced allocation. They're allocating the balance inside a GL account or a group of GL accounts, and then doing that allocation based on the parameters that you define. They are not allocating every single transaction inside your GL accounts. They're allocating revenues, expenses, and balance sheet accounts, currently intra-entity. There are some workarounds for doing multi-entity allocations, and also on the roadmap for dynamic allocations is for them to be able to do inter-entity allocations, which is going to be really cool. And it's not on the too distant roadmap. Also keep in mind, as I said, account allocation definitions are the foundation of dynamic allocations. So when you subscribe to dynamic allocations, you're going to see that your general ledger setup menu suddenly has a few more options. And those options are going to be in the allocation section. You're going to see the ability to create account allocation definitions, to create account allocation groups, and then that one at the bottom has always been there. So if you are not using dynamic allocations today, then you only see transaction allocations. When you turn dynamic allocations on and you have the appropriate permissions, you then gain the ability to use and maintain account allocation definitions and account allocation groups. So what are the steps to building an account allocation definition? This is a graphic of a battery becoming fully charged, because until you have your allocation definition fully charged, you're not going to be allocating anything in the system. So step 1, which falls under kind of the admin setup steps as I like to think of them. Step 1 is you're going to define, for this allocation that I want to generate, how do I want Intacct to treat all of the dimensions that are involved in the GL detail that underlies this? So when you're thinking about how you treat the dimensions, you have 3 options for each dimension in the system. You can say, when you deal with this allocation, I want this dimension to be an allocation focus. An allocation focus dimension is the dimension that's going to be allocated. So for example, if you want to allocate and you want the dimension value to change based on each kind of location getting its fair share, each department getting its fair share, you're going to set that dimension value to allocation focus, because that dimension is going to be changed appropriately as a result of the allocation entry. So the allocation entry is going to split things out and appropriately assign expenses or revenue by location, by department, by whatever you set as allocation focus. Preserve values dimensions are going to retain their values. That means if I have an account balance and it has $50,000 associated with Department 100, when I have my allocation entry that comes through at the end, $50,000 is still going to be attributed to Department 100 because I told Intacct preserve that value. Finally, if you say not considered, Intacct is going to do just that with it, nothing. It's not going to show up in the allocated entry natively. If you choose at the end of the allocation process, there is the capability to override, and we'll talk about that when we get to that section of the build. But natively, that dimension is effectively going to be dropped. What this does is it really does help to reduce the size and complexity of an allocation. So if you have no need, for example, to see the customer in the ultimate allocated entry, just set it to not considered because it's less data for something, for a system to have to churn through. So then the second part is starting to define your source pool. Remember, your source pool is what am I looking to allocate? So when you build your source pool, you're going to specify an account group. That account group should represent the GL account or group of GL accounts that you want to be spread out to whatever dimensions so that they get their fair share. You can define also a percentage to allocate. So for example, if I wanted to allocate all of this expense so that every department receives its fair share, I would put in 100%. And 100% of that balance is going to be reallocated to wherever it belongs based on the basis that we define later. You can also choose which reporting book your balances live in. So you could say, okay, I want you to pull all of the amounts from my accrual book, but then you see you also have the ability to add an alternate book. So what happens is when you do an allocation entry, the allocations post into the allocation user-defined book. So when you do the next allocation in line, you may want Intacct to look at both the original balance plus the impact of any allocations that have impacted that balance and do the allocation on that. So that's letting the allocations compound so that you're left with the correct amount. And you're able to do that by choosing which alternate book your additional entries live in and then telling Intacct, use amounts from both my main reporting book and alternate books. You can define the time period that your source pool lives in. So this is going to say, I want to look at all accounting expense, for example, for the current month. You can also say, look at the current year to date, whatever time period you might want. They even added in a recent release the ability to look at things like yesterday and just allocate the expenses that happened yesterday. Your true-up methodologies is basically a choice between activity delta, which means if an allocation has already been run once in the period and you run it again in that same period, if you choose activity delta, Intacct is basically going to allocate on the new activity that has happened since the allocation was last run. If you choose auto reverse prior post, Intacct is going to reverse your previous allocation entry and then record a brand new allocation entry. And it's going to do that all on the exact same posting date so that when you look at your financials at any point in time, those financial statements are going to reflect the true and accurate allocation as of that date. Then you have the option to narrow down your source pool by using dimension filters. So you can filter down so that you're only looking at source pool amounts from a particular entity, from a particular vendor, customer, any of the dimensions, even user-defined dimensions that you have in your system. And you can also use dimension groups to filter down things that only tag to a certain group of dimensions. And then on the basis section, you're going to see a lot of the same. So the source pool answers the question of what do I want to allocate? The basis answers the question of how do I want to do that allocation? So the basis is going to tell Intacct how to derive the allocation split so that it can post the allocation entry for you. And the basis is also going to be driven by an account group. So your account group can be either a statistical account group, meaning it's going to take things like head count, things like number of customers, number of vendors, whatever you may have living in your statistical accounts, even things like number of hours. And it's going to use that to calculate how much belongs to whatever dimension you're using as an allocation focus. Or you can use a financial account group. So that's going to be things like share of expenses, share of overall revenue, even ending liabilities for a certain department. And it's going to take the balance in each account group and figure out how much is then attributable to each department location, whatever you've set as an allocation focus. The accumulation allows you to choose between the activity for the period or the ending balance in the period. So basically what that means is, say I wanted to look at the revenues and allocate out an account group based on each department's share of revenue. I could say, give me the ending balance in that revenue, which means maybe for the current year to date, give me the ending balance for that department's revenue. Or I can say, look at the activity. And if I say, look at the activity, that means maybe I have current month as my time period, and I only want to look at the revenue activity that happened during that month and use that as my allocation basis. You can choose to drop negative basis lines, and what that means is it looks at the account's normal balance, and it will, so say, for example, I've got an account group called All Expenses. That's going to have a normal debit balance. So if Intacct is evaluating this basis and it finds anything that has a credit balance in that account, it will disregard it. That's an option. It's not an option that I use often personally, but it's a valuable use case for some people. And then you can filter the basis the same way that you're filtering your source. Finally, you get to the target entry, and this is probably the easiest step of the whole allocation definition setup, because your target entry is just specifying where you want this entry to go. So what GL account do you want Intacct to debit, and how do you want Intacct to handle the credit if you're in an expense allocation situation? So you can choose a single GL account for what's called the allocation destination. That's where your allocated balances are going to be routed to. So in this example we've been looking at in the slides, we're allocating different accounting expense. So we chose in this case to have the debit side go to accounting. So it's going to debit accounting expense, and then it's also going to credit accounting expense. So all that's happening in this example is just moving the amounts between the dimensions. But you have this option to check the button that says use source account. So if you were using an account group for your source where you had all expenses, and that's made up of maybe 50 different accounts, if you check the use source account button, when Intacct does the allocation, it's going to debit whatever you've said the allocation destination is, and then it's going to credit all of those 50 different accounts to kind of clear them out. So you'll be able to see them coming out of one account, going into another. It's a very valuable approach for some people. As I mentioned, the allocation entry has to go initially to a user-defined book, and that's so that you can get that really clear before and after impact and see what the impact of an allocation was. So you can choose what the user-defined book is. Generally, what I do and what we recommend is you create a user-defined book called Allocations. You create a journal in that book called the Allocation Journal, and that's where all those entries go, because it's then very easy to review them and isolate them. And then the dimension override. So when we talked about the first step of the allocation build, and I said you could set certain dimensions to not considered and Intacct would drop them, but then I mentioned you could possibly override them. That's where this happens. So say, for example, you said, you know, my vendor dimension is not considered for this allocation. However, when you post the allocated entry, I can come down here and say for every single line on that allocated entry, I want you to use a particular vendor. And that's what you're able to do by the dimension overrides. So this is really valuable. Maybe if you have certain dimensions that are required and your entry would otherwise fail, you can override here so you can make sure a dimension populates in those. It's one example of how you might use that. So I've done a lot of talking. Now I'm going to do a lot of showing. First, what I want to show you here is how we can create and run a basic account allocation. Once we get through this basic, then I'm going to be able to show you some more creative things, but I want to lay the foundation so that you can see everything I just talked about and we can put it in action. So to do that, I'm going to hop into my favorite Intacct environment, Pumpkin Spice Awareness Corp. This is a company that was created to eradicate the injustices that pumpkin spice faces in the spring, summer, and winter, and help to make it less of a seasonal thing. So in Pumpkin Spice Awareness Corp, we have several account allocation definitions here. So I'm going to walk through how do we build a very common example, which is allocating employee benefits. So what a lot of people like to do is they like to bring in the salaries by department, and then they have fringe or taxes or whatever, and that may sit in a certain department by itself, and that needs to be allocated out. So to walk you through how we would do that, I'm going to edit this allocation and duplicate it so we can perform the steps. So when you first build an allocation, you have to assign it a unique ID. You have to give it a description, and that description should be something to the effect of what that allocation does. This is a relatively limited text size in terms of fields, so you use the methodology for a more robust explanation. In this case, it's a pretty straightforward allocation, so I would put a methodology of something like this, where I'm letting you know that my other benefits are being allocated to follow the direct labor dollars. You can make allocations active or inactive. If you have some other external support for why you're doing this allocation the way that you're doing, it supports adding an attachment so that you can put an attachment there for further clarification. Then I get to the next part, where I'm telling Intacct how I want them to handle all of the different dimensions when it does this allocation. So for fund or location, I'm having it preserve values. I don't want that to change as a result of my allocation entry. For my department, I want that to be an allocation focus. That means I want each department to receive its fair share when all is said and done. Same thing for projects. I want each project to receive its fair share when all is said and done. So I set those departments to the allocation focus. And then there are a bunch of dimensions that frankly I just don't care about. So I'm going to set them as not considered because I don't want to add additional complexity to the allocation, and I have no reason to need to look at that in my end result. So next section is the source pool. So here I'm telling Intacct, what do I want you to allocate? In this case, I have an account group called Other Employee Benefits, and that's what I want you to allocate. So if we take a look at that account group, we can see that happens to be made up of a single GL account, which is Other Employee Benefits. This could easily be made up of however many GL accounts you want. You can create a bunch of your own account groups just to use in allocations. That's very common to do, actually, so that you can have accounts that otherwise might not have gone together for financial reporting. But this is the account group. And then I'm looking to allocate 100% of what's in that account group. So I want it to be fully distributed out based on what represents a fair share. The reporting book where my balances primarily live is the accrual reporting book. However, I also want Intacct to consider if an allocation has run before this and it's affected Other Employee Benefits, I want to make sure that that allocation is taken into consideration so that I'm compounding my allocations appropriately and I'm not getting all kinds of incorrect and odd results. So I would ask Intacct to add an alternate book. And to do that, I just hit select, I choose allocations, and I hit done. And then I'm telling Intacct use amounts from the main reporting book and the alternate books. For this particular allocation, I may be doing this month by month. So I've set my source pool time period to current month. That's going to look at all of the activity and balance in the source pool account for the current month and use that as a driver to figure out what we're trying to allocate. For my true up, so if I run this allocation twice in the same period, I want Intacct to auto reverse the prior post. So what I want Intacct to do is say I run this allocation once on the 15th and then I run it again on the 20th. On the 20th, I want you to reverse my entry that happened on the 15th and then record a brand new entry so that I get the correct amount in the allocation. But if I go look back at the financials as of the 15th, I can see what the allocation used to be. So I retain that history, but I'm also getting the correct allocation as of any point in time. Finally, I'm looking at only a certain set of dimensions where these balances were recorded. So I'm asking Intacct to look at the entity 100 and department 999 shared. This is a very common thing that people will do when they have things that need to be allocated. They'll put these costs or these revenues into a shared kind of dimension value, and then Intacct's dynamic allocations will help them do all the clearing out of that and distributing to the correct places. Then we have the basis. The basis is how do I want to allocate? So how is Intacct going to calculate what that allocation split is to drive the correct allocated result? In this case, I'm asking Intacct to look at the relative account financial balances, which means our general ledger accounts, not our statistical accounts. And I'm asking them to look at the balance in the salary and wages expense account group. And I'm asking them to look at the activity for the period, not the ending balance. So in this case, I want to look at the salary and wages activity for the current month and use that as the driver to figure out, based on the balances by department, by project, whatever that live here, figure out what each fair share is and then assign the other benefits expenses appropriately. So what I'm taking is the other benefits expense and I'm allocating it based on each dimension share of salary and wages expense that I have set as an allocation focus. So in this case, it's going to look at each department share of salary and wages expense, each project share of salary and wages expense, each user-defined dimension here, share of salary and wages expense, and make sure that each one of those dimensions is getting their fair share. Again, I can layer in my alternate book for the basis so that if any entries have impacted the basis that came in from an allocation, I'll make sure that's taken into consideration. Here, I'm asking it to disregard any credit balance activity in salary and wages expense. I don't really like that, so actually I'm going to uncheck that. And here I'm also filtering my basis to only the basis for activity for entity 100. So what I'm saying here is I want to look at the salary and wages expense in entity 100 and use that as my driver. Finally, I'm saying when you post the allocated entry, post that into the alternate book allocations, post that into the journal, allocations journal. I want you to debit GL account 5127, which is my other employee benefits. And when you reverse, I want you to use whatever the GL accounts are in the source pool. So with all of that done, that is how you build an account allocation definition. Now, what happens when I want to run it? Well, all I have to do is go over to General Ledger. Underneath all, you're going to see the permissions here to do things with your account allocation. So I can click Generate Allocation. I can say, look at it as of, here I'm going to do 12/31/18. And I'm going to say, run this allocation that I just did. So I can choose one by one. I can group my allocations together to run them in sequence. You can also set up recurring allocations so that this just happens for you every day, every week, whatever you want, so that you don't have to think about it as much. But this is how you would run it kind of on demand. So all you do then is you hit generate, and it kicks off an offline job, and you'll get an email when it's done. You can also keep looking at this. It takes you to this allocation log. So if you're impatient like me, you can keep refreshing to get an update on the progress. Now notice what you see here in the allocation log is a history of all the allocations that you've run, and you can drill in to see what they actually did. So for example, here's that other benefits allocation as of 6/30. I can click view, and this is going to take me to the journal entry that Dynamic Allocations has generated for me. So it's going to show me here's all the debits and credits it did to whatever departments or other dimensions that are relevant. And the credit side obviously was clearing out that shared department. If I click a layer deeper, so if I click the description, it's going to take me to something that looks awfully familiar, doesn't it? This is an automated allocation snapshot. And this is pretty much just kind of a frozen in time view of what the allocation did. So if an auditor is looking for reasonable and consistent, here it is, right? They can see, here's what my methodology was, here's a description of the allocation, here's what the allocation focuses were, here's the source pool, and when you need to look at the source pool and be able to prove, what account balance did Intacct pull to figure out this allocation, you can click See Source Pool Calculation, and it's going to give you a report which you can download and hand off. And it's going to detail what the balance was that Intacct was looking to split out. So as we wait for my 100 Excel add-ins to load, okay, there we go. It gives you a report, and this says, this is the source pool that we found. So obviously it was made up of that one GL account, which we know is true. And this is the balance. And then here's all the dimensions that were applicable to that balance. So this is proof of what did I pull? What was I looking to allocate? And this is good for you to review because you could say, yeah, that is correct. That is what I was looking to allocate. Then you can also look at the basis, and Intacct will show you, here's the basis for how I figured out what the allocation split was. And here we see here's all the different percentages or shares that were calculated. Now, if you don't trust technology or if you're an auditor and you need to be able to reprove that this is correct, the way that this is happening is you're getting a grand total of the basis amount and you're figuring out, for example, here's the balance for this line, divide that by my grand total, and that is the rough kind of percentage that I should see applied in the allocated entry for each of these. So if you look down at the target entry and you say, see dynamic split calculation, what does that look like? It looks like the amounts that I just recalculated myself to prove that it was right. If I state these in percentage format and take them out several decimal places, you'll see that these are indeed correct. So Intacct is doing all that for you, driving that allocated entry and giving you all this backup for how that allocated entry was derived. So there's really not much to argue about. It's pretty clear, pretty reasonable, and consistent. So that is the process of creating, running, and then reviewing an allocation. So I'm going to try to get through these next couple slides quick because then we're going to get into a creative use case example and then leave a little bit of time for questions. So as I said before, you can group allocations together so that if you need allocations to run in a certain order, if you need to make sure that one allocation cannot run unless a previous one is successful, that's what account allocation groups do. So they let you define the order in which allocation groups run and ensure that if one allocation is dependent on a previous allocation being successful, that allocation is not going to run unless the one before was indeed successful. So how do you decide? There's a couple different error methods you can use when you're dealing with a group allocation. How do you decide which error method to use? So what you can tell Intacct to do is either, if an allocation in my group fails, stop right there and send me an error, or if an allocation in my group fails, it's not a big deal, so just skip and continue on your merry way. These are kind of the decision points that you go into to figure out which is the best option. So if the order of your allocations matters, if the results of your allocation may depend on the result of an earlier allocation, and or you don't want to run allocations one by one and have to think about all that, you want to choose stop if a group member in the sequence fails, because that is going to give you like a red alert when something goes wrong. If none of that matters, you can choose skip and continue if a member in the sequence fails, and you might have a group of 20 allocations and only one of them works, but maybe that's fine because maybe there's not going to be something in the source balance every month. You just kind of want Intacct to check and make sure. So that could be a totally valid approach. So that's all of that up to this point is relatively basic. What I want to talk about now is probably one of my absolute favorite creative use cases that we've ever come up with for this module. And I know the person who we built this for is on the call, and it was really fun to build this with them. This is a use case where we needed to essentially true up an indirect cost allocation. So what happened was they had several projects that fall into a reporting group. And we grouped all those projects together to create a group of projects, use that as a dimension structure in our financial reporting. But within that reporting group, there were federal contracts. And some of those federal contracts had indirect percentage rate caps. Each reporting group had a project ID within it that was dedicated to holding certain indirect and administrative type costs that supported that group. So the order of operations for this allocation sequence was A general indirect allocation first happened company-wide. Then the customer needed to determine the difference between the general indirect allocation and what the percentage cap was that their federal contracts allowed, and record an entry to adjust that. So basically what was happening in their old system was they were able to do step one, where a general indirect allocation spread out company-wide, and that allocation was giving each project its fair share of expense from an indirect perspective. However, each project was not actually allowed to have its fair share of expense from a billing and reporting perspective for federal contracts, because what if the indirect that was allocated should have been 25%, but the federal contract only allows 19. So what the client used to have to do was kind of figure out what their old system had allocated, calculate the difference, and then manually book a true-up entry so that they only had the appropriate contractually allowed percent of indirect reflected. This was a manual process. This was definitely a hitch in their old allocation process. We were able to automate and replace this with dynamic allocations so that dynamic allocations essentially figured out the difference for you and booked that true up. Here's what the accounting behind the scenes looks like. I might be one of the only people that is considered a millennial that still uses T accounts, but here's what the allocation looked like for those of you who like the debits and credits. So we built this group of allocations that solved this problem for them. What it did was it takes the overall indirect allocation happens, and that's going to be whatever Intacct determines is the fair share. Then we created we took all of that cost that was allocated, and we created an allocation that took the previously allocated cost and shoved it into that administrative cost center that we talked about before. Then we created the second allocation, which calculates how much is allowed. So how much actually is 19% of their expenses. And we had that allocation take the cost out of their admin pool, put it into a placeholder ID, which is designed to clear. And then finally, we have allocation number 3, which takes that allowable cost at the percentage that's allowed per the contract and spreads it out to the projects that have a percentage, a defined percentage. So let me show you that in action. And we're going to talk about now advanced account allocations and creating and running allocation groups. So what we see here, if we look at my allocation log, we've got this concept of using the group. And actually, let me change up the order this displays so that you can see the order that they run in from like a top to bottom perspective. So this is very much what this client's use case or in real life today can even look like. It's going to do certain allocations, and then it's going to do indirect. So here we've got indirect number 1 happening, which is our company-wide indirect. Then Intacct is doing this reclass to pull out that indirect that was allocated and put it in the admin place. Then we've got our indirect at a contractually allowed rate of 18%. Then we're moving our contractually allowed rate to the projects. Now let's look at a financial report so you can help visualize more how this is working. So I've got a report here that I'm going to run as of 6:30. And this is very similar to the way that we built it for the client. It's not the only way you can build it, and we could talk about 100 different ways that we could have built it, but this is an approach that worked really well for this client because they wanted to see all the ins and outs, because it makes it easy to explain and easy to review and audit. So what we did was, you can see each of these allocations happening right on the face of the financial statement. So we see, okay, here is the allocation of indirect. This allocation of indirect took costs out of a shared pool or a shared project ID, and it split them out to all of these different projects. Notice here I've got this reporting group that was all my different federal grants. So here are federal contracts. So I've got federal contract 1, contract 2, contract 3. Those had an indirect rate, in this case I said 18%, right, that they could not exceed. So what I did is step 2 takes whatever was allocated in step 1 and moves it all over to the admin cost center, which holds pretty much the excess, either the overage or underage of the allocation that the federal contract doesn't allow. So it's a good way to also be able to represent something like, hey, here's what my cost share was. So allocation 2 moves it into this. Allocation 3 figures out what is the contractually allowed amount here, and it puts it into this clearing project. So this is the contractually allowed, kind of 18%. And then finally, allocation 4 distributes that contractually allowed amount to the federal contracts. Notice I've even built into the report as a check, here's my calculated indirect percent. These projects over here are wonderful. They don't give us any kind of limits. I could charge them 64% indirect and they don't bat an eye. But here we've got our federally contracted indirect rates where we have to be able to prove we did not exceed this rate. And I can prove that real easy because it's right here on the report. So we've seen after all this, obviously these amounts change from what they originally were, in some cases extremely, but we are now reflecting the appropriate 18% allocated indirect costs. So in all of that, once I built this allocation, you don't really have to lift a finger. You just click generate allocation, run your group, or you can have your allocations set up as recurring allocations and run automatically, and you're done. You've got your correct allocated costs. And that's really great for a case where you may have federally contracted indirect rates or any other kind of indirect rate or percentage that you want to make sure you're applying. This is just one example of the kind of power and creativity that you can harness with this application to have Intacct handle a lot of things that you used to true up or manually figure out on your own. Just one example of how you can apply that concept. Okay, with that, I know that as I said, and as we said from the start, there's a lot of content here. So we're going to open it up for questions. As I said, this is my favorite module. I would love to talk with any of you about whatever use cases you might have that you want to run through. But we'll open it up for questions. We'll take a look at the chat and the Q&A and let me know what you have that you would like to go over.
Yeah, that sounds good. Thank you, Jim. That was awesome. Again, that recording will be sent over. Wait, if anyone has any questions. I did have one comment earlier that if you could just give an example of how this has changed other clients' workloads and allocations.
Yeah, so that last example, the kind of advanced example that we went through, was really transformative for this client's allocation process. So it took their process from running allocations largely one by one, and they had a list of all their allocations in Excel that they had to make sure that they did in the correct sequence. It took all that kind of guesswork out of it, and it took that manual process out of it, and it allowed them to run the allocations in the group and to have Intacct handle the true ups. I mean, that had to have been at least a day or a little bit more than a day worth of a controller level person's time every single month that was now drastically reduced and freed up to do other work that they legitimately needed their controllers to do.
Wow, that's awesome. Okay, thank you. And then one other question came up. If the allocation has been based on the ratio of the direct labor hours in a department to the total direct labor hours, how can this dynamic allocation be utilized? I don't know if you're able to read that question, Jen.
Yeah, let me see if I can pull that up on my screen. But yeah, I see the Q&A now. So the allocation's based on, yeah, so what you would do there is that's when you would pull the statistical account concept into play. So what happens is your labor hours are likely or should be flowing into Intacct as statistical values. So there'll be statistical account entries, and you'll have a statistical account balance that represents the number of hours on each project or each department. So Intacct can use that in the basis section to use that as the kind of the driver for calculating the allocation split.
Okay, awesome. Again, if you think of anything, please feel free to reach out to us. And then in the meantime, like I mentioned earlier, just feel free to answer that survey if you'd be interested in kind of taking an even deeper dive, a hands-on training with Jim on this module. So with that being said, Jim, I'm not seeing anything else come through. So I hope everyone has a great rest of your week, and thanks for joining us today.